Know the difference with Annex Wealth Management. Brandon Lehman, Director of Branch Development, CFP, and a wealth manager at Annex Wealth Management is back. Hey, Brandon.
Hey, Danny.
Going back to a study by the National Bureau of Economic Research that showed us that even some millionaire investors regret certain investment decisions. Brandon, we're going to go through some of those regrets because I found it kind of interesting that when people who have done very well, worked very hard, amassed a lot of assets, still have some regrets.
There's quite a few regrets. And the one that jumps out to me, and I think we run into quite a bit, especially doing what we do in the financial planning, sitting down and walking through everything with clients, is they've relied so heavily on past returns. So they're constantly looking back and saying, well, this did that, so it should do this going forward. Surprisingly, a third of all respondents actually said this was an issue for them. They shouldn't have been doing this. And you see it a lot. And there's ratings, there's performance, and that's what people are looking at. But when you look at it as a team, I think our investment team, they're looking forward. What does this mean? Where is it? And Todd Voigt always says, if it's in the news, it's already too late. The other thing that we've seen a lot is they didn't diversify their portfolios. What I mean by that is a lot of people stick with something that's done really well. Hey, this has been doing really good, and it grows and it grows and it grows. And it went from maybe 3% to 10% of your portfolio, 15% of your portfolio. But now you're saying, well, it's a winner. I don't want to sell it. Well, you need to diversify. You need to shave that off and move it to areas that have underperformed, because maybe those areas are going to start performing if the market changes or the situation changes.
I saw where they didn't diversify their portfolio, and where my mind first went was not equities, as you're mentioning, but just other vehicles.
That too, that you see a lot of U.S. home country bias, right? U.S. bias, which, yes, over the last 10 years has made a difference. International has underperformed, but that isn't always the case. Think about a wave. It's up and it's down. It's up and it's down. And that's stretched over time. International outperforms, U.S. outperforms. It goes back and it goes forth. So diversification is key to, one, not just protecting the portfolio, but two, having good asset location and good assets to go through these tough times that we're starting to witness now.
Not investing in value stocks.
You do see this not as common, but it does come up. So they're always looking for growth stocks. And why? Because value stocks tend to be boring. They think they're not going to go up as much as growth. But look back at 2020, those growth stocks went on a tear. Well, what has happened this year? The exact opposite. The NASDAQ, which is a somewhat of a representative of growth stocks, is underperformed the value, which is kind of represented by the Dow in a very small segment. And that's done significantly better. And again, back to actually number 2, diversification.
Number 4 is ignoring momentum. You'll need to drill down on that.
Yeah. So really high momentum stocks. So stocks that have done really well all year long. Folks, and this is interesting because it flies in the face of the growth value discussion sometimes, but they've avoided something that's been on a tear, done really well, because they say, well, it's probably going to end. So now they're looking for that next great deal, that great buy. Well, a lot of people who are doing it themselves don't have the research tools to dive deep and see really what's driving that. Is it momentum? Is it trading? Is it fundamentals? Is it valuation? They're just looking at it, say, hey, this is doing really good or this is undervalued.
The final step really gets into the camp of Annex Wealth Management, and we believe this. I mean, it's what we do day in, day out on behalf of our clients. They didn't seek out financial advice.
Yeah, 35% of the respondents to this poll said this was one of their largest regrets. Why? Because they thought they knew everything. And actually, I love this term. It's the Dunning-Kruger effect, which is basically a psychological tendency for humans to overestimate their own abilities. We all do it. I do it constantly in certain areas of my life. Hunting is one of them. Way overestimate my skills there. But you need that professional advice. You need that team behind you. You look, again, at Annex. You look at the CFAs, the PhDs. They're looking at this every day. What's going on? How does it impact the portfolio? Where is the market taking us? What should we be doing?
And the other thing is we assume that millionaires are working in finance and things like that. That's not their main thing. They're doing other things. They're owning plumbing and heating businesses. They're contractors. They've got businesses.
And that's a great point, because millionaire investors and millionaires, for the most part, are people who are experts at their job. They're phenomenal at the thing they do, and they do it really well. Hence, they became millionaires. They sold a successful business. They became a CFO, a CEO, a COO. But they're not professional investors, which is what is a career path to go into that. So that is what we are here to do, to be a part of that team, to be your fee-only fiduciary, to make sure that what you're investing in meets your plan and meets your tax goals and meets your estate goals as well.
elite full-service wealth management. That's the experience designed for you. Head to annexwealth.com, click that Get Started button. Brandon Lehman, Director of Branch Development, a CFP and a wealth manager at Annex Wealth Management, and he had an 8-point buck this year.
Biggest one of my career.
All right, so you're a better hunter than you think. Thanks for joining us.
Thank you, Danny.